Morning, guys. Welcome to lesson 7. Is this lesson 7? This is my final part in the principle of accounting for entrepreneurs, for businesses, for people who are running businesses who are not certified accountants, who are not interested in becoming certified accountant, but want to have a grasp or just the necessary or the must-have grasp of numbers. So I'm doing it basic. It would fall under the accounting aspect of business. That is the only reason why I'm saying accounting. But don't get bugged out, don't get thrown off, don't get discouraged by that. It's not the discipline of accounting or the whole course and scholastic skills of accounting that I'm trying to give to you. I'm trying to give you the accounting principles that you need to understand to effectively run your business and grow a successful business, to sit with your bankers, to understand what's going on in your business, to make sense of the numbers. So this is the final part. I went through, I think, 2 parts already. It's the third part. And first I talk about your numbers, the income section of your accounting, the expenditure section. I talk about your systems, and I talk about recording system/recording, how you capture those numbers. Now I want to take you to a brief topic on the reason why you are systemizing and what are you looking for from the collection of that data, from the understanding of that information, from the processing of that information in your accounting system. And if you listen this outside of, you might listen this on a commute, you might listen this in an office, wherever you listen to that as you wish, but make sure to go back and when you have time, when you sit alone, and get your book or wherever you store your information and take these notes. This is very important. It's extremely important. Information, my friends, I just preface this with this to let you understand that information is the commodity. Information is the commodity. What do I mean by that? Unless you have information, you don't have direction. Information is what gives you direction. Information is what gives you the compass as to where you are to go. Imagine you are in a country that is prone to flooding, hurricanes. You're in a tropical region, and no one has any information when a storm is coming or if a hurricane is coming or not. So they see a little wind start and they see some rain and they think it's normal rain. Imagine how many lives would be lost if there was no system of gathering that information, realizing that it's heading to you, tracking it, telling you how big it is, how much impact it is likely to have, the velocity, the wind speed, the wind power, the water levels, how high the waves will be, how many inches of rain is gonna come. You imagine you living somewhere and nobody know that what's gonna happen. So you just wake up one morning and all of a sudden there's something there's so much rain and there's so much wind. It will be crazy, right? So information is what help you to know how to act, know how to respond. Because if that rain came and the wind came, everybody would be reacting. There would be no response. A reaction is just the next best thing to do. What can I do now to do damage control? A response is a planned set of steps that you are going to use to mitigate, to improve, to change. So the numbers, the information give you the direction to decide on the set of steps that you're going to take. Now, the best and most plausible form of information, and this is the goal, the best and the most plausible and most effective and the most the information that can give you the best direction and help you to make the best set of responses are numbers. There's a lot of other information, but all information is based in numbers. So now, you're getting this information. There's a bunch of numbers that's going to come from your system and your daily operation. I want you to now put it together and get a couple of key metrics from that information. And that's what we're talking about today. So the first metric, we call it metric. We call it, by metric, I mean a classification that is key in helping you to make decisions for the purposes of this conversation. That's what I mean by metric. So there are some key metrics. There are some key numbers that you must be aware of, you must know, you must be looking at, you must be tracking, you must understand how they break down, you must understand how they operate every week, every month. At best every month, at least every week. You need these numbers. So if you watch Shark Tank, or you watch any other or you follow the stock exchange and you into stocks, or you listen to any business talk, anywhere there is talks of business, the first thing that will come up is income, sales, or revenue. The government will talk about revenue or income. Companies talk about sales or revenue or income. But anywhere you go where money is involved, you will hear talks of income, revenue, or sales. That's your first metric. You have got to know how much you're selling. What is your sales number? You must have the budgeted, and you must be comparing it against the actual. Do not be running a business and you don't have a plan for how much you want your sales to be on a weekly basis, on a monthly basis, on a daily basis. If you sell tires, I'm going back to the car example again, I'm sorry, just live with it. If you sell tires, you want to say, okay, I'm going into the tire business, this is how much money I need. After you figure out how you're going to get the tires and where you're going to get it from and who you're going to sell it to, you need to now decide how many tires are you going to sell per week. What's your target? I don't care if you're not hitting it. I want to know your target. You must set a target first. Not that you can change it, not that you can revise it, not that you cannot blow through it. But I want you to know how many you plan to sell. You must have a plan and calculate the units and change it out into numbers. How much money you plan to make? Okay, I plan to sell 50 tires. I'm going to service 10 cars and I'm going to sell 6 oil changes. Your garage, your restaurant. I plan to sell 20 dishes for 20 breakfast dishes, 50 lunch dishes, 100 dinner dishes. I sell my breakfast dish for $10, 10 times 10 is 100. I sell my lunch dishes for $100. I want to sell 50 times 100, 5,000, and you work out the numbers. And you say, okay, total sales, my daily sales are supposed to be 30,000. And you have that number. You know that's your target. Monday, wow, I look at it. Okay, I have Monday to make $30,000. I only make 25. I wonder what happened. Oh, the rain fell. Oh, my breakfast crowd kind of was smaller. Oh, okay, cool. It's a good number. It's realistic. But I had some circumstances out of my control where I couldn't. And you have that number. You must know that number. We'll get into how you get that number and how you break through your numbers. We're not there yet. But now I'm saying that you must be looking at your sales numbers. The next thing you must be looking at is your cost of sales. I talked about this before. Your cost of sales is how much is directly going into providing the service or acquiring the product to sell. So you're selling a tire for $50 and you purchased it for $50. Your cost of goods is $50. When you sell, you get $10 on your money, means your gross profit is $10. So ideally, I like you to buy for $50 and sell for $150. Worst case scenario, I like you to be selling for $100, at least double. In the case of volumes, when you have high competition and you can sell a lot, your mark is $75, which is 50%. So you should be making at least 50% on your money. Otherwise, you're in a very delicate business. Ideally, you're trying to go for anywhere above 3 times on your money. Then you can scale fast. Then you can build your stuff fast. Then you can diversify. Then you can get out if you have to get out the business, because you'll have a lot of money stacked up. That is the game that Walmart, Target, Kmart, Kohl's, you name it, all these big box stores are playing. They're playing a high margin game. By high margin, I mean they're buying very dirt cheap low and they're selling pretty high. So they are paying. For example, when I was doing eBay, I was buying a USB cable that charges your phone, just the cable section of it, that 6 feet or 9 feet or 10 feet cable. I was buying that in China for 30 cents. I was selling it back in the US for $8. I was making over 5,000% of my money. That's the game you want to be in, right? That's the game you want to be in. You try to max out. Not every type of product you'll be able to do that with, but once your product can take that margin, go for the moon, because you might likely have to come down when competition come and you have to run promotions and you have to tweak it, but maximize, scrape all you can scrape from it while you are able to. That's business. That's how you do it. You go for the jugglers, and then when it waters down, you take what you can get and what can make you survive, and you keep your expenses low. So the first thing, you're looking at your income, your revenue, your sales. Next thing, you're looking at your expenses. How much is it costing me per week, per month to run this business? That's another key metric. So the first key metric is your numbers, your income, your sales, or your revenue, whatever you call it, depending on the industry. The next number is your expenses. How much is it costing me to do this thing? The next key number is your breakdown of your expenses. What are your 3 biggest expenses? Am I optimized on them? Can I get them lower? Can I cut some? What can I do with these 3 big expenses? That most people's big expenses are usually the maintaining the building, which is paying for the rent or the mortgage on the building, and their staff costs, and of course their input, whatever utilities costs and stuff like that. Those are usually the biggest expenses. So we're looking at revenue, sales, or income. Then we're looking at total expenses, and then we also want to look at what is sucking most of your money in terms of expenses. You have to be looking at those numbers every week. Worst case scenario, once a month. Your system has to be able to give you those numbers in a flash. You must click a button and those numbers must print out on a report, so you can see it, you can compare it, you can track it, you can analyze it. If you are running a business and it is a nightmare, or it takes 2 days, or it takes a whole maneuver to get you these numbers, you are doing something wrong. These numbers must be easy. They must be at your fingertips. The next key metrics is, what is my tax obligation? If you mess this up, the tax authorities will eat you for lunch. What are my tax obligations? How much taxes will I have to pay? How am I going to pay my taxes? Am I going to wait until the lump sum come? Am I going to go there every quarter and pay my taxes? If you are collecting on behalf of employees, those must be remitted. If you are under sales tax, must be paid. Don't let it pile upon you. Pay the sales tax, pay the sales tax, pay the sales tax based on when you collect it or when it is due to the authorities. Do not wait the year. Do not wait the year. Do not ignore your taxes. Do not ignore your taxes. Do not ignore your taxes. Your taxes must be paid. Factor in your taxes in your operations. It is not your money. You're collecting it on behalf of the government. When you are selling something for 10 and the tax is 1%, the 1%, the dollar is not yours. Make it go into a separate account. It's not yours. Your profits at the end of the year, which is your corporation tax or whatever they call it in your country or wherever you are, you must pay it on your net profit. Your accountant will calculate that, but you must pay your taxes. That's another key metric. And the last key metric is your net profit. How much money am I making? How much money am I making after I take out my expenses, my cost of goods sold, my cost of goods, my expenses from my sales? How much do I have left? What is the business getting? What is left? What is my total pull, taking all expenses for the month? How much am I getting? How much do I plan to get? How can I get more? You must be looking at those numbers. Those numbers mainly come from your profit and loss statement. But that's not for you to worry about. Just enter it into the machine will compile it for you. The software will compile it for you. You have to know your profit. So your first metric is your revenue, income, or sales. Your second is your cost of goods sold. How much is it costing you to buy it? How much do I make on this thing? Then that will take you, when you take that out, it will give you your gross profit. Then you're going to take your expenses. That's the next metric. How much is it costing me to run this operation every month? Then you're going to know what are the big expenditures categories in my business. What's sucking most of the money? Then you want to know your tax obligations. Then you want to know your net profit. How much do I end up with? How much does the business have? And the last one, this is very important, because if you're not in a cash business, or even if you're in a cash business, this is something that you're going to have to maneuver. And it's your cash flow. It's gonna get a little bit detailed because I really want to nail this for you. So what I'll do, I'll go on to a fourth part in the accounting principle. So I'll put cash flow by itself. Why? Because there is a way that people get this wrong all the time. Small businesses mess this up. Sales is kind of easy, taxes kind of easy, expenses kind of easy, but the cash flow might be tricky. So I'm not going to go through the balance sheet and all that stuff. Leave that. This is an accountant stuff. I'm just giving you what you really, really, really need. Those things you can grasp. If you want to kind of go deep and get it, let me know. But I'm giving you what you need, the tools. And next week I'm going to start to send out reading material. Audio. I'm going to send it in an audio form. It's online. I'm just going to forward it to you so you can start to listen to these too. Because I remember I told you I'm going to give you extra resources. But those I'll send out next week. But I'll take the cash flow from this and we'll talk about it separately in my next lesson. So thanks for listening. I hope you listen again and take notes if you never took the notes this time, because those are your key metrics and you have to be looking at these numbers on a weekly basis, at worst case scenario, at least worst case scenario, monthly basis. Thank you guys.